Very important update if you are preparing for SEBI Grade A exam. SEBI has come out with Investor Protection Fund and Investor Services Fund. I am going to talk about all this in this video. Welcome to ixamBee for 50% faster preparation. Right. So coming to this discussion today, Investor Protection Fund and Service Fund. What are these? What kind of questions you can expect from this in the exam? First, understand the mandate with the SEBI. Three main objectives: to protect the interest of the investors in securities market. Say for example, in deposits, in case of depositors interest, it is RBI. In case of insurance, it will go to IRDA. SEBI case, securities market. To promote development of the securities market. Still in our country, the securities market participation is very small, especially by the retail investors. To regulate the securities market, all these are important. And here recently SEBI came out with this. I made this video. Suspicious trading. This is under SEBI's scanner, eliminating false and unfair trading in stock market, so that you can see a fair, a transparent market where every investor has equal opportunity. The people, those who have insider trading, are not getting extra advantage of their insider knowledge. All this we have discussed in this guideline of SEBI. Now, if we talk about systems and practices, safety in market and no miscreants. Investor, so all this is functions of SEBI. Investor awareness and program, knowledge of how to invest, investor education. This goes into the development of the market. Sometimes you know that market has all safety nets, but the investor is not aware. You must be knowing that 90% of the retail investor lost money in F&O, future and options. It is not that future and options is wrong, but investors don't know. Where is the education? Where is the understanding of the market? People just trade without knowing. So that is the problem, because that's why many people feel in share market to satta-bazari hai, which is actually not, right? So we can always debate on that, but here we are talking about funds related to investor education and investor protection, grievance redressal and compensation mechanism. So this is the guideline of SEBI, May 30th. I am going to talk about this investor protection fund. First, understand types here. Investor service fund is one type, protection fund is another type of fund, investor protection and education fund. These three you have to know what is the difference between these three. And the fourth one will definitely confuse you in the exam when you will see the option IPEF and IEPF, Investor Protection and Education Fund, and Investor Education and Protection Fund. ये क्या हैं दोनों अलग अलग? Don't worry, we will cover this here in this video, and that will be good enough for the exam purpose, right? So Investor Service Fund is introduced in 92 by SEBI, advising stock exchanges to establish a fund for bolstering investor education, awareness program and training initiative. This protection fund is started by SEBI in 2004 is to compensate the investors in case of the loss because of the default or expulsions of the trading members. So that's why it is a protection fund. Protection and Education Fund 2007 by SEBI, protection of investors' interest and promotion of investors' education and awareness. Both objectives are here. This one is different. The name you have to remember for sure, but this is by Government of India. 2016, as per the Companies Act. You have to remember this much. Purpose looks same, but it is by Government of India as per the Companies Act. Now, let's go a little detail in the SEBI guideline. Investor Protection Fund and Investor Service Fund. So, Investor Protection Fund and Service Fund both are made by stock exchanges and depositories. Here, the objective is to compensate investor in case of the defaulter asset not being sufficient to admit the claim. So, as the name suggests, protection. Protection fund is administered by registered trust created for this purpose. So, a separate trust will be created which will manage this fund, not the stock exchange. So, they will create stock exchange or depositories will create a separate trust. Here, as the name says, service objective is investor education, awareness program, capacity building, maintenance of the price sticker, cost of training, minimum facilities for investor service center, recording complaint, giving counseling. It is not giving compensation in case of the default, right? So, understood the difference between the two? Now, go to the guideline, constitution and management of investor protection fund, continuation to contribution of investment protection fund of stock exchanges, contribution of depositories, utilization of these funds and deployment of funds by stock exchange and depositories and review of this corpus. So, these are the detailed guideline. We will go as much as is required for exam, ज़्यादा नहीं पढ़ेंगे. Constitution is, as we said, it is by stock exchange and depositories, shall be administered through separate trust, जिससे कि डे टू डे मैनेजमेंट में इनका इंटरफेरेंस ना हो. Trust of exchange and depositories shall consist of 5 trustees. So, SEBI has defined this also. Who are going to be trustee here? Those who are going to manage the trust. 3 public interest directors, 1 representative from the investor association, that is association recognized by SEBI, chief regulatory officer or compliance officer. So, there these 5 trustees will be there, and maximum tenure of the trustee will be maximum of the, excluding the chief regulatory officer, it will be maximum of 5 years. The stock exchange and depository shall provide the secretarial services for this IPF trust. Okay, simple one. Contribution to IPF and IPF of stock exchange. So, how the money will come in these funds? 1% of the listing fee. So, when a stock goes on the exchange for listing, there is a listing fee. 1% of the fee on a quarterly basis will be contributed for this fund. 100% of the interest earned on the 1% of the security deposit. So, security deposit is kept for subscription of the public when it is done. So, when it is refunded, right? So, same time you have to give 100% of the interest earned on the 1% of the security deposit, right? At least 70% of the interest or income received out of any investment made from the fund, because now this fund is there. So, this will contribute to the fund. In case of depositories, in case of stock exchange it was this, in case of depositories 5% of their profit from the depository operations every year, all fines, penalties or any other recovery, interest income or income received out of any investment made from the fund will also go into the fund. How it will be utilized? So, in case of depositories, promotion of investor education and investor awareness program through seminar, lecture, workshop, etc. To further strengthen the corpus, 100% of the interest or income from the IPF shall be treated as corpus of the investor protection fund that we have already discussed. So, this will be used in the awareness creation, various education. In case of the stock exchange, to meet the legitimate investment claim of the client of the defaulting trading members. Defaulting trading members, जब default हो गया, अब पैसा उतना एसेट है नहीं, so from where the money will come, this fund will be useful. The cost of training arbitrators and at least 50% of the corpus should be spent in tier 2, tier 3 cities. So, this money can also go into the training here. To strengthen the corpus, at least 70% of the interest income from IPF received every year shall be plowed back to the IPF. In fact, itna minute detail may not be asked in the exam, but at least you have to understand the broad purpose of the utilization of these funds. Any expense related to technology at ISC shall be borne by the stock exchange to meet the expenses related to dedicated employee of the trust. This can be used. Deployment of fund of investor protection fund by stock exchange and depositories. Funds of the trust shall be reinvested in the instruments such as, so till the time the money is in the fund, it can be kept in central government securities, fixed deposit of the scheduled bank, or any such instrument which are allowed as per the investment policy approved by the respective governing boards of the stock exchange and depository. So the money shall be in the safe instrument so that it will come when it is required. Review of the corpus. The stock exchange and depositories shall conduct half yearly review by the end of March and September every year to ascertain the adequacy of the corpus, कि इतना पैसा है, हमारा काम जिससे हो जाए. So other details here is, if a stock exchange or a depository is wound up or derecognized or exit, then the balance in the fund lying unutilized in the stock exchange and depository will be transferred to the investor protection and एजुकेशन फंड ऑफ द सेबी. ये सेबी का फंड है ना, हमने इनिशियली बात की थी. द न्यू गाइडलाइन विल कम इनटू इफेक्ट फ्रॉम जून 29th एज पर द सेबी. This much is good enough for the exam, and this is important also because SEBI guideline, if you are not going at the time of SEBI exam preparation, you are missing a lot. See, understand, once you have the fundamentals, enough fundamentals developed in exam like SEBI, if you are updated with the recent thing happening, you are going to crack it. There are very high chances, and we keep on giving you all these updates. If you want to get more detail, download complete SEBI Grade A guide. It's a PDF. The link is given in the description. It will definitely make your preparation 50% faster. It will help in unfolding your potential. Thank you. If you like the video, please like, share, subscribe.